Hi, this is Sive Morten with the daily update on EuroFX. I post my exclusive market overviews with the key political and economical events, charts and important levels on the ForexPeaceArmy.com forums weekly. This short video is a response to rapidly changing situation on the currency markets and should help you to stay on top of the game and be profitable. I suggest you to visit ForexPeaceArmy.com forum and read my analysis for the week before watching this daily video. Today guys, we just have to say a couple of words on Australian dollars. As you can see, market shows a really significant action, and right now the Great British Pound stand in turmoil. On the euro currency, by the way, there are some hints on the possible bounce, as you can see on the chart, but events that's now coming on Australian dollar needs of our comments. And today I have decided to dedicate this daily update to the Australian dollar. Well guys, the yesterday's plunge down is in fact the attempt and the gradual closing of the carry trades, because recently the chances on the sooner rate hiking in the United States becomes more probable. And yesterday the Treasury bonds yields have jumped up very significantly. And that these moments investors treat as possible markets hints on the bit earlier steps by the Fed on the possible rate hiking and a more hawkish policy that could be announced, for example, on the next week, where we will get the FOMC meeting. And that was the impact on Australian dollar, as the political risks right now with the more probable rate hike in the United States can't justify the spread and the ratio between the Aussie and the United States dollar. The recent rally on the United States dollar also has made an impact on this currency pair. So you can see the yesterday and within the previous 3 sessions, market is showing really significant plunge down. Well, from the pure technical point of view, we have here the head and shoulders pattern, although it looks not very harmonic. Its right shoulder is much smaller than the left one, but from the market mechanics, that is absolutely normal, because how the head and shoulders works. In fact, investors, when the left shoulder appears, do not treat this as potential reversal. For investors, this is just a retracement. After the thrust up, some retracement, investors do not treat it as the potential part of the reversal pattern. And here market is continuing to move up, it's okay, and investors treat it as just a continuation of the previous trend, but when suddenly return right back down is happening. Again, new retracement that already leads to appearing of some suspicions concerning the previous bullish trend, and that makes investors think about the possible sentiment shifting. When the third attempt of the upward continuation happens, it just usually finished by simple capitulation of the bulls and fast acceleration. So from the market mechanic point of view, this plunge and a smaller shoulder is absolutely logical, because sentiment on the right shoulder and the left shoulder are absolutely different. Here is just a continuation of the upward trend initially how investors think that it is, while here is in fact the capitulation of the bulls, and that has finished with this really slump to the downside. Well, what we have from a technical point of view, head and shoulders pattern has broken the neckline and has reached the support areas 91, 81, 38 fib support at daily oversold. So market right now is significantly oversold on the daily chart. At the same time, as you can see, this thrusting downward action is very strong and fast. It's really, as you can see, the speed of the leg. So this tip and this one. So the harmonic ABCD pattern should look like I have drawn with these blue lines. So that should be the speed, the slope of the CD leg. But we have, instead of this, just significantly faster action. It means that if even any bounce will happen here, market will continue to move down. That's really a very big chances that this will happen. Potential target of the head and shoulders is the distance between the top of the head and the neckline counted in the point of the breakout. So you can see this target leads us right to the 91.92 FIB support, 618 support. That's potential target of this pattern. Speaking about very short-term perspective, I can't exclude, guys, that market will try to pass a bit lower even with the existence of this oversold condition, because you can see market hasn't quite touched the ABCD target, and probably this should happen. This stands approximately at 91.30, 91.35 area. So market probably will hit the target before any retracement will happen, and retracement probably should happen because market at FIB support and daily oversold. That is some combination that we call as the stretch pattern by the Judd Napoli, and that really could lead to some bounce. Maybe market will touch this target on the intraday charts, particularly by forming some reversal pattern. Maybe market will form the say butterfly, hit the target with the destination of the butterfly, with the target point of the butterfly, and turns to the upside. Now about retracement. So if we take a look at the 4-hour time frame chart, it seems logical that market should retrace the neckline. So that's the neckline. If we draw the daily chart again, you'll see this blue line is the neckline. Also, guys, this thrust down absolutely suitable for the any Judd Napoli pattern. As you can see, the Australian dollar is really gold mine right now of the potential patterns. So market maybe could form here the double repo buy or something of that sort, but not necessarily. Maybe this will be something different. Drawing the FIB levels, you can see that right around the neckline stands the 4-hour confluence resistance, 92.36, 92.49 area. So you can see that the neckline right now is also the confluence resistance. So bounce to this area seems logical because market probably should show some sizable bounce since market at the deep oversold, and it needs to correct this condition. And the retesting of the neckline looks absolutely logical, and that will be here will be nothing curious with this possible retracement right to the neckline and our continuation after that. So that's our short-term view on the Australian dollar. That being said, we could make the 3 conclusions. First conclusion is probably market should hit 91.35, 91.30 area, since this is the target of the ABCD pattern and market hasn't quite reached the target. How it will happen, it could be different. So maybe market will form a reversal pattern on hourly chart and simultaneously will touch the target of the ABCD. That is also possible. Second, we should wait when the retracement will happen on Australian dollar, and the very probable destination of this retracement in an area around 92.30 area, 92.40, the neckline and the 4-hour confluence resistance. And third, since we see the really fast action with this ABCD, there is really huge chances that market will continue to move further to the downside. The potential target we have is the agreement area between the 81.82 FIB support and the classical destination of the head and shoulders pattern. That's our expectation on the Australian dollar in the nearest future.